Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon, welcome to GrainTV. My name's Cody Bills. Today is June 12th. It is a Friday. For the weekly wrap-up, let's turn over to the grain hedge trading platform, see where we closed off the day. Corn trading down 3 1/4 cents. Soybeans down 1/4 penny, mostly unchanged on the day at 9.39 3/4. And wheat in Chicago unchanged on the day, 5.04 1/4 is where we closed off the week. Let's take a look at the charts here for corn, soybeans, and wheat. See where we are at the end of the week. One thing to keep in mind is that on Wednesday we had the WASDE report. Since Wednesday, we have been trading lower here. Take a look at the July corn daily chart. You'll notice that this is a clear downtrend. And this is, I have no reason to believe that we are at the end of this downtrend. This downtrend has a lot to do with the fact that not only do we have a good amount of carryout that continues to grow, especially in the WASDE report for June that came out on Wednesday, but we also have good prospects for crop in the fall. When you look at the weather coming down the pipe next week, it should be cooler than normal in the Midwest. There won't be a whole lot of precipitation. Most of that precipitation should be on the eastern part of the U.S. and the very northwestern part of the U.S. So not a ton of rain here next week, but that's no big concern. There seems to be ample precipitation here this spring. Now, when you look at soybeans, one thing that's interesting that I want producers to pay attention to is the possibility, if we do rally, that there is overhead resistance up there around 974. So just keep that in mind. If we do rally, that 100-day moving average and trendline resistance could offer up some selling pressure up there. So just keep that in mind, considering that we are in this downtrend. You know, sometimes we do get these rallies, sometimes we get these short covering events. That's very difficult to explain fundamentally, but oftentimes in a bear market like this, it'll lead into some more selling and some continuation here. So also wheat. One thing I want to talk about when we look at wheat is that it seems as though the downtrend itself, at least for the time being, really this trend since January going across, it almost has the feeling of kind of bottoming out and moving sideways. I would say that the downtrend in wheat between January and now, I believe that there is no downtrend. I believe that this is a sideways pattern. I think there is still concerns about certain areas of production in the world. India, the monsoon rated at 88% of normal. Anytime you get below 90% of normal, you're talking about a drought year. That will impact production. That could impact corn, soybean, and wheat production over there. So that's important to pay attention to. I think when we look at wheat, we could very easily have some short covering still to do. It seems as though we found a little bit of support right around that $5 price range, right around that 100-day moving average, which has played an important role really over the last 3 weeks. So next week we'll have to see. If we continue lower here, the support is going to be on the low side of the range. If we do move higher, there is a possibility we could break out above that resistance that lies between 540 and 550. If we do that, I wouldn't be surprised if we get a little bit more short covering rally. But basically right now, U.S. wheat is not overly competitive on the global market. GASC issued a tender. They ended up selling to Russia, or they ended up purchasing from Russia, purchasing from Romania. The second tender in the last couple of days from GASC, the Egyptian wheat buyer. So it seems as though we're not overly competitive here on the wheat market. No real reason fundamentally to rally, but when you look at this chart pattern, it has the feeling of just kind of hammering out a little bit of a bottom. So it's going to be interesting to see whether or not we can turn around here for wheat going forward. Keep in mind, on Monday, we do have the NOPA crush numbers out, National Oilseed Producers Association. And what we're expecting, what analysts are expecting, is production, or excuse me, crush of 147.3 million bushels for the month of May. Now, when you look historically, if we come out with 147.3, that's going to be the most crush that we've had on record for the month of May. So that would be significant. Keep in mind, last May, we only crushed 128.8 million bushels here. And April 2015, last month, we were at 150.4 million bushels of crush. So those are important numbers to keep in mind, especially on Monday. NOPA crush numbers will be released at 11 o'clock Central Standard Time on Monday. So that is something that you're going to want to be paying attention to if you're trading early next week. Let's turn our attention now over to the cash market analysis here. This is something we like to do on Fridays. Take a look at the basis changes across the U.S. And one thing that you're going to notice is that we really didn't have much of a positive basis reaction to this week. When you look at the change here in corn basis, we fell about a penny on average across the U.S. There are parts of eastern, southeastern Indiana, southwestern Ohio that did have a little bit worse basis performance here this week, but basically for the most part it was a pretty sleepy week in the basis market. Ethanol was down about a penny and a half this week. We did see certain ethanol facilities, pretty key ethanol facilities, fall as much as 4 to 8 cents this week, and that was pretty typical to see. The Gulf was unchanged, the river was unchanged, so like I said, no real major changes in the basis market. When you look at soybeans, you'll notice that we also fell a penny there. When you look at the crush, we were really mostly unchanged, but some crush facilities did shed about 5 cents on the week. Keep in mind, though, when you look at basis here going forward, that July contracts first notice day is on the 30th, and basis is most likely going to start to come under pressure here as we move toward that first notice day, as major buyers start rolling their hedge positions into the next month. So keep that in mind. What we could see is basis start to decline as we move into the end of July, and that, of course, would impact you guys' bottom line. So thank you very much. If you have any questions about what we talked about today, give us a call. Numbers 877-472-4607. If you haven't done so already, take a demo of our trading platform. See what it's like to have live quotes in the palm of your hand on your mobile platform as well as on your desktop platform at home. And also, next week, I will not be joining you guys. I'm going to be on vacation, getting married on Friday, so that's kind of exciting. But Kevin McNew will be joining you, filling in and doing GrainTV next week, so you guys can look forward to that. Thanks a lot for tuning in. We'll see you here in a week or two.